Welcome to Protect Your Assets Market Briefing. I'm your host, David Hollander, also known as the Sandman. Now let's get started. The Dow had a pretty good week, up 1.1%. S&P up 1.1%. NASDAQ up 1.3%. And the international index continues to climb, up 1.7%, up 23.3% year to date. That is the star. 10-year Treasury hanging in there at 4.12%. Oil down pretty big this week, off 7.5%. Closing at $60.67 a barrel. And of course, we had the federal government shut down. And as a result, there will be no Fleet Week. Anyway, we also didn't get the jobs report for September because they weren't there. So what do we expect as a result of all this? Well, I expect a short-term slowdown in growth during the shutdown, followed by a pretty quick recovery once the funding resumes, because typically furloughed federal workers are guaranteed back pay. The shutdown tends to delay rather than eliminate spending. And of course, economic activity is still strong. So overall, in our view, the direction of travel for rates and the market overall still looks pretty good through 26. We had the third quarter just end, and markets wrapped up with a pretty strong note. Just looking at the third quarter, S&P gained nearly 8%. The tech-heavy NASDAQ, well, that was up 11%. And the Russell 2000, which is a proxy for small cap, small businesses, performed even better, had a 12% rally overall. So despite the government shutdown, investor sentiment is pretty resilient. And the S&P 500 has notched 3 additional all-time highs, bringing the year-to-date total to 31. It's a pretty strong year overall. So what are the forces that are fueling the strength, and will this continue? That's been the big question. And so overall, the tailwinds we're seeing from the AI innovation continues. Rapid development and adoption of AI continues to drive this market. Semiconductor stocks, which enabled the build out of the AI infrastructure, well, they've led the gains this year and this past month in particular. And this is supported by accelerating investment in data centers and AI capability. You add to that, there's cyclical momentum right now from lowering rates, with the Fed resuming easing, cutting rates, talking about cutting rates again. All those rate-sensitive areas of the market are coming back. Like what? Well, cyclicals, consumer discretionary, small and mid-cap stocks, and emerging markets. All of that pretty good. So the bottom line, we think the combination of a growing economy, rising corporate profits, and declining interest rates overall support a positive outlook for stocks. This doesn't mean that we're not going to have volatility, and this month, of course, is the one that usually brings it. So we'll see what happens.
You can hear the Protect Your Assets Market Briefing on your favorite podcast app or as an Alexa flash briefing. Just search for Protect Your Assets Market Briefing. Links to subscribe free wherever you listen are at libertygroupllc.com/PYA briefing. The following program is paid for by Liberty Group, and the views and opinions of the host do not represent those of the station or its ownership. Investment advisory services are offered through Liberty Wealth Management, an SEC-registered investment advisor. Legal information provided on the air is not intended to be a substitute for callers hiring their own lawyers to advise them about personal legal matters. The information provided is general financial comment and cannot be relied upon for your specific financial situation. Investing involves risks, including the risk of loss of your investment. Please consult with a financial professional before investing. California Life Agent number 0B48569. You're listening to the Protect Your Assets Radio Network.